Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the most bearish scenarios. The first one being an impulse to the downside, where we have a finished wave 1, a 3-wave structure in a wave 2, and look for continuation to the downside. What lowers the probabilities for this scenario is that your wave 1 is an expanding diagonal, 1, 2, 3, 4, 5, where the two trend lines are diverging from one another. And an expanding diagonal is very rare, never preferred, unless all of the other scenarios fail. Also, when we then look at this wave 2, then currently the high over here is made just before the 0.382 fib time, taken from the start to the end of wave 1, which is very uncommon, as preferably a wave 2 is ending at least after the 0.382. The invalidation for this scenario is taking out the high at 73.8k. Another bearish scenario is the multi 1-2. Here we have a wave 1, a 3-wave structure in 2, another wave 1, a 3-wave structure in 2, and look for continuation to the downside. What lowers the probabilities for this scenario is that your first wave 2 price action hit the 886 taken from the start to the end of 1, which is a very rare target for a wave 2, more common for a wave B or X, increasing the probabilities that all the price action here is corrective, not impulsive. Secondly, the second wave 2 in orange here is over 7 times longer than the orange wave 1. If you take a fib time from the start to the end of wave 1, toggle on the 7 and you get this vertical line. The common target for a wave 2 from a time perspective is between the 382 and like a 4 fib time. But the moment you're reaching 5, 6 and even 7, the probabilities significantly reduce for such a scenario. The invalidation for this scenario is taking out the high at 70k. Then we go to two bullish scenarios. Here we have a finished ABC to the downside, leading diagonal in 1, 2, and look for continuation to the upside. Inside wave 1, we are looking for the 5 blue subwaves. 1, 2, 3, 4, and then a wave of 5. So we need price to take out this high of wave 3 at least once more without touching the low of wave 2 at 52.5k, because that is an invalidation. After 1, we want to see a 3-wave corrective structure down in 2 and then impulsive continuation to the upside, taking out the all-time high. The second scenario, which is also still bullish, but here you do expect one more move to the downside, is a bigger either a WXY or a WXYXZ. Now it sounds very complex, but the only two letters I put on my chart is the X and the Y, because that is what it is all about. In this particular scenario, you can see I currently have the X positioned over here. If that's the case, then wave Y is a flat, 3-wave A, 3-wave B, and we need a 5-wave C, meaning this has to be an impulse to the downside on the 1-hour time frame. It is not allowed to be a corrective structure. It can be like a zigzag, for example, in a ending diagonal where all of the waves are 3-wave structures, but an ending diagonal in a wave C is less common than an impulsive structure. And also, if this over here is a wave 1 of an ending diagonal and we look for 2 and then 3 and 4 and 5, it is very unlikely that your 5th wave at the moment is going to be deep enough to take the low of A, which then means this becomes a running flat, A, B, C, and a running flat is very rare, never preferred unless all of the other stuff fails. Now, if I would put this wave X on the top here on the right side, then inside this wave Y, we can still have either a zigzag structure, so a 535 to the downside, or still a flat structure. So even if price takes out this high over here, then the bearish scenario is going to flip to a flat structure. If we then zoom out, then you can see I now have two volume profiles on my chart. One is from the whole range and the other one is from a 49k. And what you can see here is a nice confluence between the point of control of the more local volume profile and the value area low of the bigger volume profile and the value area high of the small volume profile with the point of control of the bigger one. So you can see the resistance to the upside here between 62.9 and 63.4k and support between 59.5k and 59.2k. We also have some news today, Friday, October 4th, 2:30 p.m. Central European Time. I will be live on YouTube at that time to observe the price action together with you. So let's see if we can get some volatility, and make sure you, of course, trade safe as volatility is expected during those hours. And if we then look at the probabilities, then currently on the daily time frame here, the probabilities are higher for the bullish scenarios compared to the bearish scenarios. The expanding diagonal and the multi 1-2, the two bearish scenarios, right, that lead to a bigger bear market, have a lower probability than the bullish options in this range, which is the leading diagonal over here, and even the WXY. It very much depends on the 1 hour time frame, and that is of course the scenario that we usually focus on, like yesterday as well. So far so good, bit of a bounce towards the upside as expected. And the most bullish scenario, being a 1-2-1-2 type of structure, will only really appear in my content if we can hit the 886 taken from this high to wherever the low might be. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.